The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Good morning from the offices of Duke & Duke in sunny Philadelphia, Pennsylvania. Folks, they're having a funeral today in the commodity markets. It's for gold. I officially heard today on Bloomberg that there were absolutely no more bulls left in the gold market. They had all gone into let the bears take over, and we'll wait till the bears hibernate again is what they said, so we'll have to wait and see. Trading Places was on again last night on one of the channels, Encore, which is one of my favorite movie channels to watch, and I watch part of it. I've seen it so many times that every time it comes on, one of my daughters always calls to remind me to watch it because I've seen the movie so many times, but I certainly enjoy it to this day, just as much as I did when I saw it the first time at Water Tower in Chicago in 1983 when it came out. My good friend Jay Crossman, I sat through the movie 3 times. We liked it so much. It just really became really a lot of fun through the years. Okay, the gold. We have been looking at the gold down here at 1050 for a long time. Friday we hit 1051 and change. We hit 1052 this morning. People have emailed me already saying, is that the bottom? Folks, I don't know, but that's awfully close between 1050 and 1051 on something that we've been watching since the middle of September. So I think it's close. I don't know if that's going to be it or not. We could jab down one more time. We could easily, go down to the 1.27 down to the 1040 level. But I think we're close in here. How will we know that the bottom is in? Well, you won't know until it starts to rally, and you'll have to have a pretty good rally of at least $34 an ounce, and then I would say, yes, the bottom is most probably in. But I think this is where, if you like patterns and you want to, see something where you've got the odds in your favor for a profitable trade versus a losing trade, I mean, this is the kind of thing that you want to look at. I mean, the whole world doesn't want to own it, so you're on the side of a contrary opinion for sure. You have a pattern completion down here at 1050. 1051 was the low, maybe. I mean, I don't know. It's only rallied $9 off that bottom, so it's not much of a rally at all. So you just have to wait and see. But it's really got a chance in here, folks. It really does. Now, the silver has not made new lows. It hasn't even come close to making new lows. And platinum was able to make new lows last night by just a little bit. Now, we've had a longer-term pattern on platinum at the 804 level. We got down to 826 last night. So here again, that hasn't changed very much. But this is the kind of place where, in the gold market, where you might want to be looking at buying a call. Look at $1,100 call out into March. I don't think you have to pay much of a premium for that, but it would give you some exposure to the long side. And remember, each time we've had these big bottoms, and this is similar to the other bottoms that we had in March and also in July, they're in inequality. That's why we have the ABCDs down here. So this is it. And, as we know, gold is one of the better traded of all the commodity things we look at. So keep this on your watch list. Because it's got a chance in here. The fact that the whole world is now bearish. The big news overnight is the fact that the Chinese yuan is going to be included in the IMF baskets for currencies. I don't know what the weighting will be, but my imagine is they'll bring it in really small to start out with, and then over the years they'll increase its weighting. As you know, the dollar index is 53%, and we've had the dollar trading above 100 now, which we should take our hats off to Tom O'Brien, because he was talking about King Dollar when it was 73. So we'll keep an eye on this one too. Now the euro is has just made another ABCD pattern down here at the 105.61 level. We took out Friday's low of 105.66 overnight, and so far we haven't gone below that. So it's could be probing for a bottom in here, but it's still, again, too early to tell. We'll get into the stocks here in just a minute, but I wanted to go a little bit more into the metals market, because the copper market is held up above the $2 per pound level, much better than any of the other metals. So that's another positive sign that we could be looking at something real interesting. Okay, the first chart we're going to look at here is going to be the something one of our subscribers here at TFNN, one of our den folks, Mr. RK, sent to me, showing that over the past 20 years, that the compound annual rate of return for individual stocks varies a great deal. The median compounded rate of return was 5.1%, but 14% of the stocks had a compounded rate of return better than 20%. This is what we've been saying all the time, is that it's just a few stocks that are causing this move, in the market. And we see that most vividly when we look at the New York Stock Exchange Index, because here again, we stayed all last week, we stayed exactly at the 61% retracement of the whole move down from November the 13th to the move up into the 9th. All of that was telling us, into the 20th, was telling us that it's just stayed here. It's just a big consolidation. Now we could easily break out to the upside today if we get the S&P futures above 2105. You'd have to think that will be a breakout. But again, you're looking at these stocks that are there's about 140 of them. You've got the S&P 500. There's about 80 to 100 stocks in there, and you've got the 15 in the Nasdaq, and then you've got about 10 or so in the Dow Jones that account for almost all. Well, they account for all of the gain that is going on in the market. The breadth of the market is still deteriorating. We're having more new lows than new highs, which is not a good sign. So that's basically what I'm seeing. I don't see anything different than what I've seen before, because it's just the ones that are moving up. But you have to respect it. I mean, this could go on for another month or two, possibly. We do have a lot of astrological things coming in this week. They're very, they start on Monday, the 30th, and they go all the way into the 4th. And of course, 4th is the non-farm payrolls day. And then on Thursday, we have the Federal Reserve beige book, I believe, or one of their committees is going to be mentioning, and they're going to see whether they're going to, raise rates or not. But frankly, I think it's already in the market that the rates have been raised. I'll show you a chart here from the comparing our 10-year treasuries to the treasuries of Germany, which is really surprising, considering we have almost as many problems as they do, and yet their yield on their 10-year bond is 0.46%, whereas the yield on our 10-year treasury bond is 2.2%. It's 5 times greater yield. Why would anybody buy a bond from Germany at 4.6% or 0.46% when they could buy a U.S. Treasury, which is also AAA rated at 2.2%? And and we're supposed to start raising rates, which would make this go even higher. So I don't understand the relationship at all here. This is part of the problems of trying to understand the basic economics, whereas being a technician, you just sort of look at the prices and say, yep, that's what it should be doing, and that's in fact what it's doing. So we'll watch that with some anticipation, because they are going to raise rates, whether they do it this year, next year, or whatever. There will be some type of a rate. We're in an area, folks, where this has never happened before, where we've gone, I think it's 6 years now, where we've had, this quantitative easing where they've manipulated interest rates, and, that's caused havoc from, other economists through the world. So we'll see if that's going to be the case. There's still some deterioration, of course, in the commodity markets because we've had new lows in gold, and then we had new lows in platinum. We've had new lows in oil last week. So there's there've been some breakdowns in that. But on the longer term charts, we have potential for a big ABCD forming in some of these commodities. But I don't believe that will happen until pretty much after the first of the year. That's what I would be looking at. There's a chart here that I wanted to share with you from our good friend John Murphy that shows the relationship between the yield curve, which is the two-year Treasury note, versus the CRB index. And you'll notice the CRB index is going down, making new lows from September. But if we looked at this on a really long-term basis, going back over the past 8 or 9 years, I'll try to get that chart ready for us for tomorrow. You'll see you're going to be seeing a big ABCD pattern forming here in the CRB index also, which will be telling us that maybe we're going to be bottoming here in the CRB index. And this could be the thing, the canary in the coal mine that the bears in the stock market, i.e. yours truly, have been misinformed about, is that this low in this commodity market could mean that these economies are getting ready to turn around. It's been very apparent now that China has some big problems. They were down 5% last Friday, and the market broke down badly. It was down another couple percent early this morning, and in the last hour of trading, the Chinese market rallied up to be slightly up on the day. The most amazing one, folks, I know you folks like to trade the S&P, but please tell me that I got this one in here. I spent so much time getting this chart ready. Oh dear. I want to show you here it is. I believe this is it. Maybe this is it. Nope, that's not it. I want to cover that one later. Oh dear, I wanted to show you the relationship of the German DAX to the U.S. S&P futures, and you're going to see an amazing move, because the German DAX moves 1 or 2% up. I mean, that's a huge amount. That's equivalent to more than 20 S&P points, and the S&P hardly moves at all. But as soon as the DAX started to move, our market began to finally rally, because we got down to 1082 last night. Wow, let's get the numbers right. 2082 in the S&P, and then as soon as the DAX started to rally after opening slightly lower, it just took off and rallied 150 points. Now, 150 points in the DAX is a huge amount, because that's traded in euros. It's the contract is we got to take a little break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted into Tiger TV the German DAX using a 15-minute chart. Just show, I think, well, it's a 5-minute chart showing you the volatility. As you notice, it opened lower down near that 786 level, and then it just shot up. I mean, it didn't even have any, there was no selling. I mean, there's basically no swings in between. It just went straight up 160 points, which is the equivalent of about 20 S&P points. We were trading at 2082 when that happened, and then boom, away it went, and it went up all the way. In fact, this wasn't even the high. The high came in at the 1.618 expansion at 11,430, and we're about 50 points below that right now. So we want to, just to see what's going to happen with that. If you trade the S&P overnight, or if you well, the DAX is actually the better one to trade because it has such much better swings. But if you're trading the S&P overnight, you really owe it to yourself to look at that German DAX because it's a real leader of what the market is doing over here. I mean, it pulls our market along. Now, after we open, not the same thing happens. Now, the next chart that I wanted to show you was the Shanghai Composite that we talked about a little earlier. As you'll notice, we bottomed down on that August 25th level, just like everything else. And as you notice, the market rallied for 3 months in the Shanghai. And of course, the rally didn't amount, well, it rallied to a 382 off of the high of last May and 61% retracement off the high in July. But the problem is it took 4 months to do that rally, and a lot of those stocks, more than 30% of them, are still not open for trading, and so that's a big difference in how much volume is going on over there, in my opinion. But we'll have to wait and see. There is just a overall agreement that the stocks are going to go higher here in the United States, which is usually a bad sign, but it has not shown any signs of any chink in the armor as of yet. Even the New York Stock Exchange Index that I follow so closely has just gone up to the 61% retracement. And as I mentioned, it stayed there all 5 days last week, Monday, Tuesday, Wednesday, closed on Thursday, well, 4 out of the 5 days. And then on Friday, with a very low volume day, it was still trading at the same level. Looks like we're going to be opening around the same time here on the market this morning, and whether we pop out or not, we'll wait and see. The whole news, of course, is about the Cyber Monday, Black Friday, Purple Thursday, whatever they call these dates, and it's taking away from the brick and mortar build places like Walmart and May Company. As a matter of fact, I wanted to show a chart here for you folks, just to show you Walmart, which is one of the great success stories in American business. It almost equals the Mellons and the Carnegies and the Rockefellers. But you'll notice here, since 2009, we went down and made a 786 retracement here in Walmart just about 2 weeks ago, when we were having that sell-off into November the 13th. And we've had a little bit of a rally since then. But the reason why I post this on here, those of you that are looking for something that is relatively low price with relatively good value and a pretty good track record, this is the place to start looking from the long side of Walmart, in my opinion, because the thing is sold off 50%. Well, it's sold off 40% from the high, so you're certainly not paying up for it. It's much better to pay 59 for it than it would be to pay 89, which was the high was 90.89. So that's one of the things that you want to look at. When my grandson was born back in 2000, I put a little money away for him, and stocks were going down, and so I picked something like I picked U.S. Steel, and it was really cheap at the time, and the stock did relatively well. And that's the kind of thing, on a long-term basis, you try to find something that is pretty much of a staple in our society now. I think they have 45,000 stores across the country. They're relatively well run. I don't shop there, but other people do. I watch the Walmart shoppers on YouTube, of course, but I don't do much shopping. All my shopping is done online. It's too easy, because all you'll be able to we'll be able to see if that's going to be the case. Now, if Walmart gets below $55 a share, you certainly don't want it, because then it's below the 786, and it could easily go down to the 1.27 of that move. So we'll take a little break here. We can see the stock market opening up a little bit. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, this is Billy Ray Valentine from the offices of Duke & Duke in Philadelphia, Pennsylvania. We had a question about our favorite stock, Apple Computer, and we had a long discussion on Bloomberg today. I happened to watch it. The lines they showed at the New Jersey Mall, which is where the offices of, I believe, CNBC are located. The lines were unbelievable. Just to buy the iWatches, there were like 50 or 60 people in line. Now, folks, I realize that sometimes, those lines are not legitimate. They pay people to stand in line to act like they're going to buy products, but they frankly don't do that. So I would be a little suspect about it. I have looked at the Apple Watch, and I'm certainly not at all enthralled with that particular piece of information. Now, we've had a $11 rally in gold so far from the low that we had. Whether that's going to be the start of it, I'm not sure. It did start in the right direction. We'll have to wait and see, but that's still a little too early. I believe we're very, very close in the gold market. Now, if you'll remember, just give me 1 second here. I have to do one thing here. I've got to change a little something, and I wanted to show, where is it? Where is it? There. Come on, gold. Here it is. I wanted to show that neural net forecast that we had from Larry Edelson. We've been showing this since November the 9th. And since we've been, this is the end of the month, we should show it again, because it certainly has followed right along with what the gold market was supposed to be. Now that in itself is pretty good, because you'll notice that the last part of this from middle of November, the first week in November, it just showed a quiet down move, and that's exactly what's happened. And whether that's going to be the bottom or not, I don't know. But if this continues to work like this, this is really a great map. And this is what neural networks do. When they're on, they are absolutely spot on. But boy, when they're wrong, that means that they just have to be repopulated and rerun to get a better view of what's happening. What neural networks do is they go back into the past and they look to see patterns that should show up in the future, and that's basically what they're doing here. Now, there's all different kinds of artificial intelligence that you can use, and that is, they can use fuzzy logic, genetic algorithms, all kinds of things that they have in there that are really, really very, very sophisticated. It's far, far beyond my pay grade. All I do is when I see a forecast like this, I take a look at it. Does it match up with what I'm looking at with the patterns? And if it does, then yeah, it looks relatively okay to me. So that's primarily what I'm taking a look at when I watch these things here. So I am watching this gold very, very closely in here, because it has a chance to doing it. The other thing is, we had Rich Anderson on last week, and we're getting close to some pretty significant support here in long-term prices of both corn, wheat, and soybeans. All three of them are getting very, very close, so we want to be watching that into the first of the year also, because I think we're going to see some a little bit of a bounce in some of these commodities just based on the large ABCD pattern that I'm seeing in the long-term CRB index. If that in fact is the case, we will watch that very, very closely. The Dow Jones transfer trade. Oh, the question, the black line is the actual line of the gold, and the green is the forecast. That's what that is, Bob. It's basically that's what it's doing here. The reason why you see that is the green goes out in the future, the black doesn't go out there yet. I haven't seen an update of this chart as of yet. I've requested one, but I haven't seen one yet. But I know that it's been following along because I watch gold daily, and that's pretty much what's been happening with it. So we need to watch it very closely. That gold pattern is a really beautiful pattern, folks. It might not work, but those are the kind that you really like to see. I tried to find those of you that have been in the program here for a long time. If you'll remember when Apple was 700 a few years ago, we had the big ABCD pattern, and we measured it to go down to 385, from 710 down to 385. And it got to 383. I don't know if you remember that. I haven't been able to find that darn chart on Apple, but the low was 383, and then from there it went up and made a 1.27 expansion of that move. And this is the same pattern that we're seeing in gold, like we saw in Apple. It's the same type of long-term pattern that is going going to come out. And believe me, there's very few people that are interested on long side of gold now. So this is one thing, just on contrary opinion basis, you ought to keep an eye on it. Take a look at some of the gold stocks. If we look at the XAU here, you'll be able to see here that the gold silver index is actually holding way above the lows from September. that's another good sign that could be pretty important, I think, because we did have a 382 off of the low from September, and now we're coming down and retesting that bottom. At the same time, the leader of the pack, which is gold, has held up relatively well. It's held up very well so far, considering we're making new lows in some of these, and others are not going down. Some of the gold stocks that we look at, one of the ones that I know they follow here in Tigerland here at TFNN is the let me give me 1 second here. I hit the wrong button on that one. Hold on just a second. Where do I get it? Here, there it is, right here. I wanted to show you Gold Corp here, and you'll be able to see that that's what we're looking at. There's a potential 3 drive to a bottom here in Gold Corp. So if you buy this around this level, around 11, your risk here is only about 5%, which would be about $0.50 a share, and we could get a pretty substantial rally in that. By the same token, you could look at GLD if you wanted to, and you'd be able to see the same type of a move that we've seen in some of the other things that we're watching here. So those are some of the main things. The currency markets have a tendency to change trends slightly between December and January. A lot of that is based on the large companies that trade Forex, and I'm talking about General Electric and IBM, where they hedge their bets on how much products they think they're going to sell in certain countries, and so they hedge their bets against various currencies. Now, if we look at one of the major cross rates here, and I know a lot of you folks don't trade Forex. You should, because it's one of the greater markets to trade. But if we take a look at this, let me see what we got here. We have, there we go. That's a good sign. Just made a couple of bucks, which is not bad. Okay, let's take a look here at the cross rate, which is one of the major ones. This is the euro versus the Japanese yen. As you'll notice, the euro's been coming down just like it is against the US dollar. But here against the Japanese yen, we've now reached the 786 retracement on this cross rate. And if you look at the low in September, folks, on this chart, you'll see that it hit the 61% retracement and rallied well over 4,000 pips. So we are in a session where we have 2 ABCD patterns here in the euro yen. We have a butterfly pattern in the euro yen. We have a 3 drive to a bottom pattern in the euro yen, and we have a long-term 786 going back to last April in the euro yen. So the risk here is very, very small. What's this telling us is the euro might have a chance to rally here. I mean, I know I don't know, but I feel very strongly that the euro is going down to par. I don't think there's, if you look at this on a long-term basis, you'll take a look here. When we look at the euro, it has everything in the whole world that tells you that it wants to go to par. We're trading at 105.75 or something like that right now. We have some smaller, the other low that we had back here way back in March was at 104.50, so we're 150 pips away from that. We could easily get a 300 or 400 pip rally. I'm not saying that's going to happen, but I'm saying it could, because it's very, very oversold, and we could get a pretty good rally and then go down to the par level. The euro yen is one of the things that is telling me that there's a potential for this to happen. The euro made a slightly lower low than last Friday by 5 pips, and still hasn't rallied very much, but at least there's not any continuation of the selling at that point. So that's the main thing that we have moving on. So we keep that in mind. Someone's asked me a question about the Walmart, and I mentioned if the Walmart goes below 56, it's trading at 59. If it goes below 56, you don't want it. So it's a $3 risk here, and if the market is really bullish, which I don't see any indication that it is. I'm not talking about the overall stock market, not just the S&P, the NASDAQ, and those Dow stocks that are going nuts. But if this is really bullish, your Walmart will be pulled up, I would think. So that's just my 2 cents worth. I wanted to share with you one of the someone's asked about Newmont Mining. Here was another stock, in the gold complex that looks real interesting from a buy standpoint, and that shows you that the Newmont has held above the 786 here, whereas we made new lows in the gold. Newmont has not actually done that yet. So here's another indication of a gold stock that's actually showing some signs of life. Now, this is one of the larger of the fact is the largest gold producer here in the United States. So we will watch that closely too. But there's another sign that gold could be getting ready, to make that type of move. So there's another reason why we want to be watching the overall picture of what we see, going on with some of these different commodities and cross rates. I'm giving you a mix and match. Oh, we have to talk about one of the most popular seasonals in the whole world, and that is the small caps, the Santa Claus rally with the small caps, where the small caps gain on the large caps. As you can see here, the IWM for the small caps for the Russell is we're very, very close to the 61% retracement up here at the 120.50 level. We probably hit that this morning sometime, would be my guess. I'll check the price a little bit later to see if it is in fact going to do that. But there's a reasoning. This is one of the most highly followed seasonals of anything on Wall Street, folks, and that is there's a tendency for small caps to gain on large caps during the first part of the year. Sometimes it starts in December, sometimes it starts in January, but it just means, in other words, if the stocks break a lot on the Dow Jones and the S&P, it just means that the Russell stocks will not break as much. It's a ratio of those stocks. That's what we're watching here. I'm looking forward to listening to Basil this morning to hear his interpretation of the VIX index, because again, I heard on Friday, I happened to be watching a little bit of Bloomberg early in the morning, and then again another announcer came on, one of the guests, and said that the VIX was again relegated to the fact that it was really not a very good indicator anymore. And every time they say that about that thing, it usually raises its head and said, hey, please count me because I'm still in school here. So we want to, watch the VIX index, because there is no fear in the market at all. Not here. There isn't. And the amazing one is the DAX, folks. I mean, you stop and think the problems that Germany has with Volkswagen and Deutsche Bank and all those immigrants, and the stocks keep going up. Man, you can't fade that. That's suicide. When you got bad news and the bad news out there and it doesn't want to move, boy, be very careful. Be afraid. Be very afraid, as they say in the trade. So want to watch that very closely also. So that's the main thing that we want to be keeping an eye on with some of these things. Having a little bit of a sell-off in the S&P this morning, not enough to hang your hat on very much, but they're starting to give a little bit of a wiggle, but we'll wait and see. We checked the overnight buying and stuff in the on Thanksgiving night for Black Friday, Black Friday, and there were a lot of people in the malls, but nobody was carrying packages. They were all just looking. So it's a real interesting situation when you have that moving on. So we'll watch it closely here. Treasury bonds, we've had a pretty good break in bonds here for one day. We had a pretty good sell-off of well over a point. Now we're rallying back to the 61% retracement in that. So that'll be interesting to see if that can hold. And we'll be watching that one closely also. On the commodity front, those of you that are interested in trying to find a good value on grains, keep an eye on the wheat market. That March wheat for 2006 down at the 478 level. We made an overnight low of 475. So the risk here is very, very small. We're going to take a little break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're wrapping up the show here. We're down a little bit now in stocks, not too much. NASDAQ is still holding up better. The Russell is still making new highs. We took out Friday's high by a few ticks. We're about 50 cents away in the Russell from the 61% retracement that comes in at 120.60. We're trading at about 120 now in the Russell, so we're very close to that move. We've just made, from the overnight trading, we just made a 786 retracement in the S&P there at 2084. And in the NASDAQ, we just made a 61% retracement at 4680. So as long as those figures hold up, we'll probably start to rally from here. But going below those levels would set up for a reversal type day where we could get more move to the downside. But it's still, early. We've only been trading for 25 minutes, so there's not really too much. Just to give you a quick recap, when we come into the Christmas week, on Christmas Eve, it's a shortened session. And it's also the day after Christmas is a shortened session also. So you want to put that on your calendar, that will be a little reduced. And believe me, that's the lowest volume days of the year. I don't know anybody that trades those days. It's a terrible day to trade. Forex might be a little better, but just enjoy the families and stuff. Don't mess around with trying to scrape a few bucks in a market. So it's going to be really, really illiquid during those last couple of days. The day before Christmas, of course, the day after Christmas. That's my 2 cents worth. I'll leave it at that, and you can see what's happening. Now, the main focus here, folks, is we got to watch the gold market. We have only rallied $11 off the bottom. We're still looking for it to get down to $11.50, possibly even, $11.40 on. Let's try it again. $10.50 and $10.40. There's a possibility it could get down to the 1.618 expansion down there, but just keep an eye on that. That's what we are watching. The Nasdaq has taken out the highs. We're already coming out. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.